Ladies and gentlemen, girls and boys, may I have your attention, please? Are you ready to engage in a mind-blowing experience and hear talks about life, technology, entertainment, and business? The next episode of HIPTHER Talks starts in 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, go.
So good day, good morning, good evening, everybody. Thank you for joining us into another episode of HIPTHER Talks. We had a few weeks of a break to handle our tech conference and Mare Balticum events. And here we are again with another special guest in the person of Tony Hay. Hi, Tony. Thank you for joining us. Please tell us a little bit about yourself, a little bit about the company, and let us hear more.
Sounds great. Hey, everybody. It's very good to be here. And thanks, Alex. Thanks, HIPTHER, for inviting for this speaking opportunity. Looking forward to a great discussion today. So a little bit about myself. My name is Tony. I'm working at commercial side at Sentinels. Mainly, I have backgrounds in commercial, and previously I worked in cybersecurity fields. And it was about 5 years ago since I joined the Fintech RegTech space. Currently at Sentinels, my goal is to make sure that we deliver the right compliance solution for transaction monitoring, anti-money laundering, counter-terrorist financing for all kinds of customers across the fintech space. And a little bit about the company. The Sentinels company started about 3 years ago in Amsterdam, focusing on solving a very specific challenge, which is scalable compliance. To be more specific, covering the transaction monitoring and screening. We started with a kickoff customer called Molly Payments, who is now one of the fastest growing fintechs in the Netherlands. They reached to unicorn status recently. Our company, started with this customer, and right now we have around 20 customers. So I would say that was a very fast growth from the company side. And we are recently acquired by Fenergo. They are an Irish RegTech company covering client onboarding, KYC, client lifecycle management. So with this merging of two companies, now we can say that we have a complete portfolio covering the entire customer journey for our banking and the fintech's customers.
Okay, so is it safe to assume that after this acquisition, your company is like the pocket Swiss knife you need?
We can say that, but in the meantime, you consider like a Swiss knife to contain everything. But with the fintech RegTech, we also want to take a step further, which is to be modular. So that means a customer, probably some customers, they don't need everything. And we want to make sure that they can pick and choose the module that's useful for them and easily connect to their system.
Mm-hmm. I see. That sounds good. And I like that open mind attitude towards this, because being modular right now is a go-to when looking for a solution. So let us a little bit more on the fintech term. What are the things that we can safely assume that are fintechs?
If we're talking about the fintech term, it stands for the financial technology, and it's basically economic industry. it covers multiple companies. But the main goal of fintech companies is to provide, by utilizing the new technologies, to provide financial services that challenges the traditional financial service provided, to make people connected more easily financially, and also to provide new type of services.
Mm-hmm. So is it for business only, or me as a standalone person can benefit or use fintech solutions?
That's a good question. The fintech solution is targeting everybody, I would say. For individual users, for example, you have services that you could utilize to transfer funds internationally, for example. You could use, for example, apps to manage your investments. But also for the corporates, right? Like, of course, that's another important part of the fintech's coverage as well. Yeah, which is also, there's an interesting point that in the fintechs, we see that for individual users, you have typically the idea of onboarding people who are unbanked, right? So, now almost everybody has a digital device. You have laptops, computer, also especially the mobile, which provides you the platform for individuals and companies to access, right? So on the individual level, you have a lot more number of users, but let's say the profit could be lower per user in terms of financial service providers. But you also have large companies who are utilizing the global network. Providing sort of like seamless experience. For example, like Airbnb, they're not a financial institution, but take you, Alex, you travel to Asia and you stay in Airbnb. Neither you or the property owner are seeing the actual FX, right? But it's happening like seamlessly, right? So you have this type of embedded idea. But what we see new as a new potential or a new trend where a gap could be filled in the coming years would be the SME lending, which we already see a lot of companies are doing that, but there's clearly a huge potential for that.
Okay, so it seems that this idea that was going between users at the start in the starting period of fintech, that fintech is the same thing as digital banking. It is not, right?
Right, at least in my opinion. Digital banking, you can consider it to be one branch of the fintech. So basically, digital banking is to digitize the traditional banking service, right? Mm-hmm. So now I believe a lot of people are already used to managing their banking service on their mobile or on their computer. I think those days we're waiting for the numbers to be called in the bank office is kind of behind us. It's not 100% yet, but basically digital banking is, again, like I said, utilizing your digital platforms so that you can manage your more specific, banking services to be managed remotely. But like I said, fintechs covers, there are a lot more space where fintechs is, providing a different type of services other than just the banking side of it.
Mm-hmm. I see. Now, what are the ups and downs that fintech is bringing on board with this whole evolution
Yeah.
in terms of technology?
Yeah. Probably. I mean, I cannot talk about like too long time scale. But what I can say is what I've seen with the unfortunate pandemic situation for the world. It has been a disaster, right? But if we're talking about the fintechs, the pandemic has been working as a booster, like a huge booster for the fintech services. I've been reading reports from large financial institutions saying that the pandemic has boosted the cashless, the contactless, card not present, remote payments services for about 2 to 3 years scale.
Mm-hmm.
So if you think about it, that's really huge. And I believe most people can relate, right? Like if you were still living a kind of old school kind of lifestyle where you're holding cash and you're going out during the pandemic time, that wasn't possible. And a lot of people have to adapt to more remote type of access to different products and services. So that's why we see it has been a huge boost to the fintech business. So like if we're talking about ups, of course, there's a lot to talk about, but maybe I could narrow down to a few aspects. First aspect is if we're looking at geographically, if we're looking at where are the most people that are unbanked, then probably we're talking about Africa or Southeast Asia, which is where if you're a fintech company, you're looking to provide alternative services to connect those people for financial services. That's probably the market to go to. But if you're looking at more advanced market like, Europe, China, USA, for example, North America, it's probably more about pushing the existing service to the next level to be even more embedded, more seamless, more convenient. So again, like I said, all these areas has great potentials. I wouldn't say in the way of like a downside of this, but clearly this has a lot of challenges, right? So when you are providing a service to be more seamless, that means you also need to have a very robust risk management and compliance management in place, right? So yeah.
Okay, so you brought up me right to the next question, talking about risk management. How is it actually done? What are the few things to consider when getting a risk management team on board? If let's say I'm a company and I think I need a risk management team. Are there cases where a company thinks they need a risk management team and it's not the case? Or have you seen, I suppose you've seen the other way around, companies that actually needed a risk management team, and even if they didn't know that. So let us a little bit more on the insights of how things are done.
Yeah, sure. I would say the two scenarios you mentioned, I would say both exist, but overall, in my opinion, all companies needs to manage their risk, right? Depends on the stage or size of the company. Like if you are just starting up, probably standards risk management process is enough for a while. But if you're already sort of a established fintech company or digital banking provider, means you are holding very sensitive data, probably the most sensitive data, right? Customer and their payments, right? And I mean, me taking advantage of experience working in the cybersecurity world, I've seen really advanced hacking techniques, right? Things that you don't even realize when what's happening next to you, and all of a sudden millions of users' data are stolen. Those are huge incidents, right? Could be a huge scandal. It could cause a company huge fines, huge financial loss, or eventually companies could bankrupt because of a huge security incident. So that's one thing. But taking that, I'm currently working in the regulatory field. That's another very important risk aspect financial institutions needs to look into. So of course, for financial institutions who are licensed to begin with, they already have to have a, for example, anti-money laundering, counter-terrorist financing policy, procedure in place. But so that means, like, for these type of companies, of course, they would need a team to manage that. And in fact, it's a hard requirement, right? Like in a lot of markets, that when you're licensed in this market, you need to have a compliance team. You need to have a money laundering reporting officer. You probably need to have head of compliance or CCO or CRO, Chief Risk Officer. So like the team is necessary. But to begin with, if we're talking about the few items that would need for the company to set it up, I would say if you're just setting it up, it begins with understanding what's your business goal, what's your client coverage, what type of services you're providing. And with these elements put in the formula, you should be able to analyze what types of risks, for example, if we're talking about money laundering risks, what type of risks you could potentially face, right? Give you an example, if you compare to two companies who are both offering money transfer service. If one company is only targeting low risk countries and the other is targeting high risk countries, the type of risks in terms of compliance they will be facing will be completely different, right? Bless you.
Thank you.
Yeah. So to conclude, I would say that you need to understand your business. You need to understand your product. What's the scope? What's the geographic coverage? What type of service you're offering? What type of users you're targeting? And then you need to, of course, have the risk assessment done. You need to have your anti-money laundering policy and procedure in place. And that's just to begin with, right? The next aspect is how can you make sure that you scale your business whilst managing your risk, right? That's another interesting topic.
And I think it's a tricky one.
Indeed, yeah. We've seen actually many companies where there's a certain level of tension between their compliance team and the commercial team. You see that the commercial team wants to get customers. They want their sales trophy. They want their president's club. They want their bonus, right? But the compliance team, they, by default, they are in a position of telling the commercial team, hey, hold on. These guys, let me check, right? Let's make sure those guys are not risky. And in the meantime, every financial institution, they have their anti-money laundering typologies. They have the system in place which are generating alerts, right? So if a company is onboarding clients very quickly, so that means the number of clients will increase very rapidly, which equals to the number of transactions increasing rapidly. In a compliance team point of view, it equals to the point where the number of alerts will increase at probably the same speed or even faster. So again, then it's the time for compliance team to tell the commercial team, hey, hold on, we cannot handle these loads anymore. You have to give us a couple months to onboard, to double the size of the compliance team. It's not like you can just hire somebody and who can jump on the alerts, right? You need to onboard them, you need to train them, make sure they're ready to handle all those cases and not making mistake, right? Like a mistake in a anti-money laundering process could be very severe. With the severe consequences if you miss important anti-money laundering cases, right? So like it takes time to onboard people. Sorry, long story short. So what we see is that there's this constant battle between these two teams. And of course, in the eye of a leadership, C-level, CEO, that's of course a pressing issue, right? But if you just flip the coin to the other side, you will see that actually by enabling the compliance team to manage their risk more efficiently, then it becomes a business enabler, right? So that's kind of the way we work with customers. Of course, bottom line, we have to keep every client compliant, right? That's important. But in the meantime, we deliver the efficiency and scalability in the long run for the compliance operation, so that companies can much more easily consider to onboard new business. For example, to open up a new market coverage, to get customers much more quickly, because the compliance team is much more robust than before.
Mm-hmm. Just out of curiosity, is it common to have a risk management team that is not part of the company, like a third-party service? Are these things going, or is it traditionally part of the company just because they have to know all the insights? Because as you explained before, it seems that on one hand, you need to have all the insights in the company, but on the other hand, it's a topic that you can't afford to be biased. So,
yeah, that's a good question. So indeed, traditionally, companies would at least start with the risk management team internally. Probably because, when you're starting, that's kind of like, a must-have. And like for licensed financial institutions to get the license, they already need to have part of the risk management and the compliance management procedure in place, right? So that's how you start the business. And like I said, this initial setups will take you to a certain level of, let's say, in terms of scale of business. And then you face the bottleneck. Like I said, your risk management team cannot handle the cases anymore because of the volume, for example. And then the company face actually several choices, right? There are companies who would just develop it internally further, which as a vendor, of course, we are biased, but I think it's a fair argument when we argue against this idea, because financial institutions, their core business is to provide whatever service they are focusing on, not compliance, right? It's not their key value proposition. So why should they invest all their technology, tech development resources into something that's not their core business, right? However, you cannot escape it. You have to have it. So then the other options, firstly, are you can choose a vendor who's specialized in this space, who will enable your team to do the job much more efficiently and effectively. And of course, there's another option, like you mentioned, which I think has great potential, which is a third-party outsource for, let's say, compliance as a service, as an idea. But I mean, still the companies, they need to have their own money laundering reporting officer, for example, but some of the first line of defense works can be outsourced. And
so it could be done either way.
Yes. But what I see is that, I mean, I've seen like in cybersecurity more often where companies completely outsource the risk management to a third-party company. So not just solution-wise, but the team as well, right? So they don't have their own security team, IT security team. It's outsourced to some other, for example, part of Big Four or like other providers. But those are more typically what we see done by bigger companies, like, I mean, large telcos or large financial institutions. And if we're talking about startup scale-ups, I think largely those companies will still have their risk management team and compliance team in-house. But what I was talking about is more of a middle ground, right? So they keep their team who, they spend a lot of resource to train and a lot of resources to get them to be loyal to be your employee, know your business very well, know your risks very well, just to enable them with a much more robust solution. I see that as a middle ground, or probably like a sweet spot. But I mean, if you're a bigger company that has a lot of volume, and let's say you have very strong seasonality in terms of volume, right? So, or for companies who might, let's say, receive an audit, so that means their team will temporarily have a whole lot more work than the normal times. So for these instances, I think a compliance service as a service to outsource at least part of the process, like the first line of defense, would also make a great value proposition.
Okay, really interesting points of view. I mean, I think this topic can be seen in a whole different angle, talking with several people. So everyone has its own point of view on the matter. But the bottom line is that compliance is mandatory, and especially if you're in the industry. Now, could you let us know a little bit more on what products and what solutions is Sentinels offering?
Yeah, of course.
On this subject.
Yeah. So kind of like continuing my speech, Sentinels offers a complete out-of-the-box compliance platform for transaction monitoring and screening. So you know that in your compliance team, you have different parts where you need to manage. For example, just to begin with, you need the logics or let's say the business rules, which are typologies that you define based on the risks you have. And those rules will receive those rules will generate alerts based on the client and transaction details you receive, right? And the second part is once those alerts are generated, you need a team to review those alerts, right? To decide whether you think it's true positive or false positive, and what are your assessments, what are the evidences you gathered. And the next step is all those alerts reviewed by, for example, by the first line, and then by QA, and then finally escalated to the money laundering reporting officer, who should decide finally which alerts you need to report to the local FIU, right? And then, of course, you decide, and then you have to execute the reporting part as well. So you see that, I mean, I might make it sound like easy, but it's very complex work. And what we see typically in, let's say, early stage companies, or even large financial institutions, this process is very divided. Like they have pretty much siloed data in each step, right? They have client details in one solution. They have transactions in another. They have another system for saving files. They communicate with a different tool. So normally we are looking at like 4 or 5 different platforms to complete this task, right? So of course, then you see that as your company grow a lot bigger, this doesn't scale anymore. Or otherwise, you could, of course, if you have the money, you could always double, triple your compliance team every now and then. But we don't see that as a sustainable business model. So what we do here, exactly. But unfortunately, it's happening to a lot of companies.
Oh, really?
Yes, yeah. I'm not going to name any company, but we see companies, you know, they because of this, they all often have to like quite fastly hire more compliance people in their team. So what we do here is with all this process, like I mentioned, the business rules, the alert handling, the reporting, and also the overview of your client's behavior, right? We put everything into one. So first of all, of course, the clear advantage that instead of opening 5 tabs, now you just need to open one, and all the necessary information is shown in the most readable way in front of you with as low clicks as possible, right? So of course, it's already a lot more efficient. But what's also important is that how it helps on the, let's say, the psychological level for our compliance team, right? I mean, like, I probably, like, you are not probably handling alerts, but let's say you are trying to read something and then you open 5 tabs of different articles. It's much easier for you to lose track of thoughts, right? But if you have everything in one, your idea is much more concentrated, and it's much easier for you to pick up the essentials. So that's why we think it's very important you put it everything onto the same platform, and providing a lot more efficiency and insights on the clients as well. So this is the Sentinels part. But like I said, recently we got acquired by Fenergo, who's a leader in the client onboarding lifecycle management space. So and now you know that compliance is very key part of the operation. But before the anti-money laundering, counter-terrorist financing operations, you have to onboard your client first. You have to calculate the risk score of your client first. You have to do your KYC process, right? So with this merger, now we can say, so we have a complete suite of solutions for companies to choose from.
Okay, and what industries are you guys targeting? Of course, there's the fintech and the financial side of things, but are your products suitable for other industries as well?
If we're looking for a short answer, the most relevant industry would be any companies who are licensed, right? So of course, largely those companies, they would be either, let's say, traditional banks or fintechs. And in fintechs, you already have like so many different verticals, right? Like you have remittance, you have challenger bank, neobank, you have wallets, you have crypto. So different spaces. That's already a lot to cover. I think the market cap is also pretty high in this space. So still a lot for us to do. So I would say that probably will remain as our focus, at least for this period. But indeed, like you said, of course, when time's right, we'll also explore other industries who probably didn't start as a full-on financial service provider, but they're extending their service into this space. For example, they could be a good potential as well. And a very interesting case is that, for example, if you consider marketplaces, right? Which of course received a huge boost because of a pandemic as well. And typically you would look at marketplaces as a platform provider or like even a merchant, and they're not typically a financial institution themselves, right? But what we're seeing from the regulatory perspective is that some central banks are putting more attention on this type of providers, probably because they could be susceptible to financial crime, right? I mean, you provide a platform for people to trade freely, and there could be a lot of risk going on there, although they are not licensed institutions, right? So if we're talking about extending our service there, that could be a very interesting area to look at.
Mm-hmm. Okay, so thank you very much, Tony, for sharing with us all the secrets of your trade. For those of you who want to hear more on this, we will have Tony as a speaker on our upcoming event, the Prague Gaming Summit, on the 21st of June. And if my memory still works in the right parameters, you will be on a panel about fintech in the gaming industry. So that's going to be a really interesting discussion. So thank you very much, Tony. Thank you everyone for tuning in, and don't forget you can jump on HIPTHER.com/podcast to pick your favorite platform to hear or see our podcast. And see you next time. Thank you once again.
Thank you too. Have a good one.
Thank you for joining. Be sure to check back next week for the next HIPTHER Talks and subscribe on Amazon Music, Overcast, Spotify, Google Podcast, Apple Podcast, iHeartRadio, SoundCloud, Mixcloud, and Pandora.